When most people hear about tariffs, they imagine heated debates on Capitol Hill, stock tickers flashing red, and billion-dollar corporations adjusting their bottom lines. But the real story of tariffs doesn't just unfold in boardrooms or Wall Street. It unfolds in the small warehouses, storefronts, and factories scattered across America. Small businesses, the backbone of the U.S. economy, are often the first to feel the pain and the last to recover. And yet, their struggles are frequently overshadowed by the media's obsession with big business and market fluctuations. Take the example of Midwest Tool and Cutlery Company, a small manufacturing firm in Michigan that produces hand tools. When tariffs on imported steel kicked in under the Trump administration, their raw material costs surged. Steel prices shot up by more than 25%, and this small family-run business had no choice but to raise prices for their customers. Unlike larger corporations, they couldn't absorb the cost or hedge with international supply deals. As a result, their sales volume dropped and they had to lay off several workers. This wasn't just a temporary hit. It changed the company's trajectory, slowed growth, and limited their ability to invest in new equipment and hires. Tariffs don't operate in a vacuum. For many small retailers and manufacturers, particularly those who rely on imported goods or raw materials, these taxes at the border function like a double-edged sword. On one hand, they're supposed to protect American industries. On the other, they disrupt finely tuned supply chains that small businesses have spent years building. A small furniture store in Texas, for instance, that sourced parts from Vietnam and China, suddenly found itself buried under new paperwork, shipping delays, and 10–15% higher input costs. Their margins, already razor-thin, shrank further, and their competitors, who had the resources to stockpile inventory or diversify sourcing, gained an unfair advantage. Even worse, many small businesses lack the legal and financial teams that large corporations use to navigate tariffs. Big firms can shift operations across borders, file complex exemptions, or restructure product classifications. A corner electronics shop or a specialty apparel maker doesn't have that kind of agility. These entrepreneurs are often forced into the uncomfortable position of either eating the cost or passing it on to customers and losing loyalty. It's a lose-lose proposition. And while some policymakers argue that tariffs create domestic jobs, the reality on the ground is far messier. Take the solar industry. While tariffs were imposed on imported solar panels to support American manufacturers, thousands of solar installation jobs were lost because the cost of panels increased significantly. Most of the solar jobs in the U.S. aren't in manufacturing, they're in installation and maintenance. So the very policy intended to protect American jobs ended up killing more than it created, especially among small installation companies that couldn't handle the price hike. The restaurant industry too got slammed. From seafood to specialty cheeses, many eateries rely on imported ingredients. Tariffs on European food products meant that menu prices had to go up or recipes had to change. For a high-end Italian restaurant that built its reputation on authenticity, swapping out Parma ham or imported buffalo mozzarella wasn't an option. But neither was losing customers due to a 20% price increase on entrees. These businesses don't just sell food, they sell experiences. And tariffs quietly chipped away at that value proposition. Agriculture saw a similar pattern. While large-scale farmers received bailout checks from the government to offset trade war damage, small family farms often lacked the connections or knowledge to tap into those same support systems. Tariffs on exports to China and other countries led to retaliatory measures, reducing demand for American soybeans, dairy, and pork. Small farms that depended on these markets found themselves with product they couldn't sell and rising costs they couldn't contain. In a cruel twist, some small businesses became collateral damage in a geopolitical chess game they never asked to be a part of. A Texas-based tech startup developing smart home devices ran into unexpected issues when tariffs made certain Chinese components too expensive to source. Their manufacturing partner in California couldn't keep up with the demand, and finding an alternative supplier would have taken months. By the time they found a solution, a competitor had captured their market share. In the startup world, timing is everything, and tariffs shattered theirs. One of the most ironic outcomes? Many small businesses started looking outside the US for stability. As uncertainty around tariffs increased, foreign suppliers and manufacturers became more attractive because they were not entangled in American trade politics. In effect, the very policies meant to bring jobs and business back to the US ended up pushing smaller players away. Of course, not all small businesses suffered. A handful found opportunity in the chaos. Domestic producers of goods previously dominated by imports saw a temporary sales boost. A Michigan-based textile company reported a sharp rise in orders after tariffs on Chinese clothing took effect. But even they admitted the growth felt unstable, contingent not on business fundamentals but on unpredictable political decisions. No business wants to plan their future around the whims of a trade war. Long-term, small businesses are pushing for more clarity and consistency. Many support fair trade and stronger domestic industry, but they want policies that consider their scale and agility, or lack thereof. Blanket tariffs rarely do that. What works for a multinational may crush a mom-and-pop operation. Without nuanced policy-making, the U.S. risks gutting the very sector it claims to protect. The real impact of tariffs is written not just in balance sheets but in the lives of small business owners, the workers they employ, and the communities they sustain. These are the entrepreneurs who drive local economies, who innovate on tight budgets, and who can't afford to wait out multi-year trade disputes. They don't need handouts, they need predictability. Because while Wall Street might bounce back after a market scare, Main Street doesn't have that luxury. In the end, tariffs are more than just an economic tool. They're a political statement with real-life consequences. And if America wants a thriving economy built on innovation, resilience, and fair opportunity, it must look beyond the skyscrapers of Wall Street and start listening to the voices in the factories, kitchens, farms, and storefronts of Main Street. If you're passionate about the future of small businesses and want to see smarter economic policies that don't leave the little guy behind, share this video and join the conversation. Don't forget to subscribe for more deep dives into the real stories behind the headlines.